Studying financial accounting involves a mix of numbers and theory. The following video talks to the requirement "critically discuss" that appears in many tests and exams as you progress through advanced courses. A critically discuss requirement generally involves a fact pattern that you would need to analyze, identify what is trivial, what is important, read the assumptions carefully, identify what is obvious, what are red flags, what happened, did something go wrong, most probably yes. You be the judge. You judge in terms of regulations, IFRS, accounting standards, and the Code of Professional Conduct. It also involves you jotting down the correction as well as drafting your answer in a suitable report format. Reading a question is key. You got to break each sentence down into its nuclear components, cross-check everything that you've read against other parts of information, identify the hot areas that will earn you more marks. Some questions may be read with a financial accounting hat, and for others you would need to use a multidisciplinary approach. Here is a thought process that goes into approaching a question. I have summarized it into a matrix. The first column of your matrix involves reading the actual question and identifying each component. After identifying the component, you need to highlight the information. Information is clear. Information is what is evident in the question. Information is not something that you make up, and information is not something that you infer. Information opens the door to possible considerations. In a financial accounting question, your considerations would be around recognition, measurement, disclosure. Now, remember, one sentence of information can have multiple considerations. Your considerations gives you ideas as to what you can jot down on paper, but not all ideas will be worth jotting down. So let relevance be your guiding light. A question is always read in the context of the subject. When you're doing a financial accounting test, your focus will generally be on matters of financial accounting relevance. It's so easy to be misled and go off a tangent, but that is why your requirement will give you a scope to guide you in terms of what is relevant and what is not relevant. If information is provided and if it has possible considerations and if it is relevant, then you need to evaluate it. Is it right or wrong? Should it be expense? Should it be capitalized? Is it revenue? Is it capital in nature? You have to be explicit and state if something was in fact correctly or incorrectly done. Always back this up by why. Assuming your evaluation has led you to the part that the accounting treatment was incorrect, you then need to provide a recommendation. What should have occurred? An example, PPE should have been capitalized. The asset should have been depreciated. If you follow this matrix correctly, you should be able to score high marks. Let's approach this with a question. Afrostyle Clothing Limited is a clothing retail company based in Centurion, Pretoria. The company was started by Mr. Maseko in 2016 and has over the years grown its footprint into 10 stores across South Africa. Afrostyle has 3 product divisions: clothing, homeware, and cosmetics. The financial year of Afrostyle ends on the 31st of March. So up until this point in time, we have background information. That is an example of your component. The information is fact that has been provided to you, and your possible considerations give you an idea as to what are you going to do with the information. How are you going to use this information? Points number 1 and 2 may not necessarily have financial accounting repercussions, but this gives you an idea in terms of your considerations if assuming if it was, say for an example, an auditing question. Point number 1, the self-service system. During May 2024, Afrostyle hired Hertz Technosis, Hertz, okay, to develop a self-service point of sale system. So let's pause over here. So the fact that they're hiring Hertz, they're using a consultant, and your considerations is around whether this is in fact externally acquired software, or are they internally generating this? And since they are using an external consultant, it is very clear that it's going to be externally acquired software. The research phase of this project started on the 11th of May, but also just before we go on to that sentence, the fact that they are developing a self-service system, it also gives rise to the element of development, So now with development, should development costs be recognized as an asset? Should it be recognized as an expense? How did they recognize it? And is their method of recognition in fact right or wrong? Secondly, the self-service point of sale system. Is it an asset? Should it actually be recognized as an intangible asset? Okay, so that's also something else that you need to consider. The research phase of this project started on 11th of May 2024 and ended on 28th of July 2024 at a total cost of 1.3 million. Okay, so in terms of the research phase, they're telling you over here from the information 1.38 million was incurred. Same story, should it be capitalized? Should it be expensed? Was it capitalized? Was it expensed? Is it correct what they did? Is it incorrect what they did? The development phase started on 1 August 2024 and ended on the 31st of October 2024. So here with development, they're giving you a date range, and this date range is basically important for you to identify the date that the recognition criteria was met before you can actually recognize development cost. A fee of 118,000 was incurred and paid on 31st October 2024 to register a patent over the self-service point of sale system. So with regards to the patent, same story, 118,000. Should it be capitalized? Should it be expensed? Was it capitalized? Was it expensed? Is what they did right, or is what they did wrong? The self-service point of sale system became available for use as intended by management on 1 November 2024 and was expected to be used for a period of 6 years. An insignificant residual value was allocated to the self-service point of sale system. Why is this important? So they're giving you information around the intangibles available for use, information around what date it became available for use, around the useful life of the asset, as well as the residual value. The possible consideration with regards to this is based on amortization. But remember, amortization may or may not be relevant depending on what the required asks of us. The total cost incurred and paid during the development phase amounted to 21.1 million. So 21.1 million is the development cost. So here again, Should it be capitalized? Should it be expensed? Was it capitalized? What was it expensed? What components of it was capitalized? What components of it was expensed? What components of it should have been capitalized? What components of it should have been expensed? Which included 3 physical self-service kiosks at each of the 10 stores. The amount of 21.1 million did not include the cost of registering the patent above. Each self-service kiosk was purchased for 75,000 rands. Okay, so on the topic of the self-service kiosk, the first point where they give you information around 3 kiosks at 10 stores for 75,000 rands each, that is an easy calculation that you can do to work out the cost of the physical machines. The second part is with regards to the actual purchase of the self-service kiosk that they have included in development cost. Should it be in development cost? Is it an intangible asset? Is it not an intangible asset? It's a physical self-service kiosk. Are intangible assets supposed to be physical or intangible? You know the answer to that. Each self-service kiosk was purchased for 75,000 rands and became available for use as intended by management on 1 November 2024. In addition, an amount of 600,000 was incurred and paid on 1 November 2024 to train staff. So with regards to staff training, same story goes, should it be capitalized? Should it be expensed? Was it capitalized? Was it expensed? If it in fact is allowed to be capitalized, then the supplementary consideration would be around amortization. On the use of the self-service point of sale system, it is expected that each self-service kiosk will be used for a period of 5 years, after which it will be sold for a residual value of 10,000 rands in order to upgrade to the latest self-service kiosk. All costs incurred were paid in cash. The financial accountant of Afrostyle processed the following journal entry to record the above transactions, and it gives you the debit and the credit, and it gives you the amount that was debited and the amount that was credited, and a breakdown of these amounts over here that you then need to cross-check to other parts of the question. So your considerations over here are, firstly, with regards to the self-service kiosk, they're giving you information around the date, the useful life, and the residual value that would have possible amortization or depreciation consequences. With regards to the element of the journal that they are debiting intangible assets. Should 23.1 million actually be debited? Is 23.1 million the correct amount that they should be debiting? From the credit side of the entry, they're crediting bank. Should they be crediting bank, or should they perhaps be crediting creditors? They do tell you over here that all costs incurred were paid in cash, so with regards to the credit side of the entry, they most probably are right. In terms of your requirement, critically discuss in terms of the relevant accounting standards the journal entry processed by the financial accountant to recognize and measure the self-service system for 8 marks. Please note, assume that the self-service system met the definition and recognition criteria of an asset on 1 August 2024. You are not required to discuss subsequent measurement. Your discussion should be supported by relevant calculations. You must not provide any journal entries. So here you see that the requirement limits your scope, okay? And in terms of your scope limitation, specifically with the second bullet, they're telling you to ignore subsequent measurement. So all of the paragraphs where we spoke about amortization or depreciation, you can now ignore all of those aspects over here because your requirement is telling you what is relevant and what is not relevant. The next step is to plan your answer. Your solution is drafted based on what you see in the fact pattern and what is part of your knowledge base. Information is raw data and raw facts. Your knowledge base in this case is what comes out of IFRS, and where your fact pattern and IFRS and your solution merge is where you basically use your professional judgment to be able to draft an answer. This Venn diagram is meant to show you that you can't merely regurgitate all facts in providing a solution, and you also can't merely just regurgitate IFRS. A critical discussion is about being able to do this skillfully. So, as discussed, here are the ingredients of a well-written solution. Knowing which facts to use are key, and knowing which IFRS to apply is a matter of professional judgment. To recap, each component of information comes from your fact pattern of the question. Your information gives rise to possible considerations. The union between your fact pattern and IFRS is about using professional judgment and identifying what is relevant, and then evaluating it based on the benchmarks or based on the relevant standards, and a culmination of what is relevant and what is right and what is wrong and what should have happened and what should not have happened goes into your solution. This isn't the end, it's just the beginning. Are you using the correct accounting lingo? Do you want to see a spike in your marks? Please reach out to us if you wish to see the next part of this video. We hope that you've enjoyed this video. Please click like and subscribe for more. Thank you.